Hey there, this is Bill with smarttrades.com. Today is Thursday, January 17th. It's around 1:15 p.m. Pacific time. And as always, if you would like more frequent updates, please visit me at smarttrades.com. And today I'm going to talk about some dividend stocks and a new service that I am trying to provide. If you have any interest in that, please contact me directly. That's Bill at smarttrades.com. That's my email address, and you can also reach me via my website at smarttrades.com or message me right here on YouTube. At any rate, as you can see here, this is the long-term chart on the S&P. We've discussed this one before. Folks have been, most Elliott waivers out there have been calling for a top for some time. And I know one famous Elliott wave guy has basically been short since about 960 on the S&P back in 2009. The other Elliott wave folks out there have been basically perpetually short or getting ready to get short also since really just a few months into 2009 and that first little bounce. This is my long-term chart. I think that there are other scenarios that may be playing out, obviously, but I think the long-term perspective that the entire decline from 2000 into the 2009 low is still my favorite count, and that we're working on a B wave now back up, and in fact, we may only be in A of that B wave. Keep in mind of the magnitude of that decline from 2000 to 2009 in terms of time, obviously about a 9-year period, and we've only been rallying back now for less than 4 years. So if B is the same, in terms of time, we may yet have more to go, or it's possible, it doesn't have to be as long as A, but certainly there may be more to go, and we may be only partway through even the B wave sequence, if indeed this is a huge giant flat that started back in year 2K. Anyway, double zigzag formation. You've got a cluster of targets actually up around the 1550 area if this market can get through the area it's in right now. I do have my doubts about that. I'll get into that in a moment. And the main thing to remember that this rally is indeed corrective. We have lower momentum readings shown by the ADX, my favorite momentum indicator, and also a lack of volume on the rally. Here's the daily chart, and I am concerned a bit that we are going to falter here at this upper trend line. Interesting to note, though, on the S&P, we have taken out that 1474 area, that previous high. That negates this as a wave 1 down and a wave 2 corrective rally back up. Again, it's still possible we're going to roll over here, have some kind of double top relative to the September high. But the other scenario is with a equals C type scenario, 1550 and 1.62 times A also comes in around 1550. And again, that all-time high comes in around 1574. Let's just back up and look at that, or excuse me, 1576, pardon me. So there is a possibility we may go up and tag these this trend line and that resistance area from 1550 up to about 1576 on the S&P. Nonetheless, again, caution is advised here as we bump against these upper channels. It's possible we'll roll over, and that's why we do updates just about every day at smarttrades.com, because the markets do change. And we want to be flexible with them. Here's my long-term count. I've had this up forever, this idea that we're in a big triangle in the euro. This sits pretty well with the idea of a huge sideways pattern in the S&P and Dow as well. And A equals C comes in around 138.40 or so. There's another resistance area around 135.30 basis the euro futures. Natural gas. This has been something we've been reporting on at smarttrades.com for some time. We've had a nice rally back up. I think that probably was a B wave, and from there a 5-wave structure down. I think that probably best counts as a C, and you can see even internally within there 1, 2, 3, 4, 5 down, right into a nice support target zone. just around that 1750 area basis UNG. We're also looking at the QN, the natural gas mini futures. But again, looks like a bottom there into previous fourth wave resistance now. And real nice, almost ideal Elliott wave pattern on that low in natural gas. Now here's some of these stocks. We've been looking at breakout stocks recently, and I'm thinking of doing a new service where I just do stocks perhaps weekly or monthly. It would be a more inexpensive service. Right now I'm including that with my day-to-day service. And so visit smarttrades.com or let me know if you would like these reports. And at any rate, this is a BMA. We're looking at a breakout here and then looking for a pullback. This is from our report from December 15th of 2012. And we were looking for about 1650 and the pullback. Didn't quite get there, but a real nice ABC back to the recent lows here. I think they're around 1680 basis BMA. Here's another wild one. ChangeU.com. Chinese game company, I believe. I don't really care about the technicals. I'm looking mostly at, patterns. And this is a real nice. This again is from the 15th of December, and here's the update through today. Nice little ABC pattern, and then the breakout here with a relatively low risk breakout pattern right at the top of the larger pattern. I like these kind of patterns where you're seeing breakouts on 2 degrees of scale, and the smaller pattern is mirroring the larger one. You can use this smaller pattern as your breakout and then place a stop at the bottom of the smaller pattern, reducing your risk on the breakout rather than using the breakout of the entire pattern and placing your stop below the larger pattern. In this case, it worked out quite good for CYOU. HPT, Hospitality Properties Trust, nice wedge type decline. You can also look to buy the bottom of these patterns, but again, I like these little fractal type patterns that mirror the larger pattern. This is from the 15th of December, and here's our update. Again, you had a nice wedge, a smaller corrective type pattern within that wedge, and then the nice breakout. By the way, HPT yielding about 7%. These yields are according to TradeStation. No guarantees on whether or not this is accurate or not in terms of yields, but nonetheless, like I say, as far as the information I have, about a 7% yield. So this breakout here, not only a nice move in terms of price, but if you can manage to hang on for some time, there's a nice yield involved too. UPS, similar type deal. We have that wedge type decline, a corrective decline back to test the top of the wedge, and here's the ensuing pattern. To my way of thinking, I probably would push the stop on the initial move. We had a target of about 76 as our initial target, and then you've got a secondary breakout here, or the retest of the breakout to get long again in UPS. UPS about a 2.8% yield. And Intel. This is one I believe I have covered in the past here on YouTube. We had a nice 5-wave structure up. There's previous 4th wave support. Nice corrective decline. And right into that previous 4th wave support. Overshot it just a bit. But this is a nice setup for a buy here as well. Intel also a good yield, about 4% yield basis Intel. And last but not least, Dow Chemical. Again, nice wedge type decline. I really like these. Again, you can buy the bottom, the test at the bottom of the wedge. The problem with that is oftentimes you don't know if the pattern is over, and you may have retests, but you can certainly jack up your stops if you do get in successfully on these tests. And then the secondary breakout at the top of the pattern here, up around the 3050 area. Dow Chemical yielding about 3.8%. And finally, follow up on Facebook. No yield here as far as I know, but really nice Elliott wave patterns. We had an irregular or expanded flat, if you will, which we talked about in the last video. And from there, a nice impulsive rally up. This could be a series of 1-2s or perhaps some kind of larger corrective pattern, but nonetheless, if you'll remember, we were originally looking for a target in the low 17s, mid 17 area, and in fact we did get a bottom a little bit above there, but a nice impulsive rally from there. This corrective decline in our supposed 1-2 pattern. Again, you see that wedge type pattern, that signature corrective style decline, and it holds right at the small previous fourth wave support and also a 38% retracement of this prior rally. Anyway, that's about it for now. If you'd like more updates, please visit me at smarttrades.com. Again, the individual stock analysis, basically it's going to be a service that's going to look for high yield stocks and breakouts and such, and it would probably go out at this point. I'm thinking maybe once a week. It is included in my service at this point, so if you do subscribe to smarttrades.com's newsletter, you will get the dividend stock reports as well. Again, that's smarttrades.com. Thanks for watching and have a great day. Bye-bye.